9.4. 9.4 is going through and journalizing transactions using a general journal. Now, we have used two special journals so far in Chapter 9. We have done the Purchases Journal, and Purchases Journal really is the easiest one because there is only one column for numbers. You're affecting purchases as a debit and accounts payable as a credit. In 9.2 and 9.3, we went through and worked on our cash payments journal. The assignment that we worked on yesterday using our cash payments journal was using the petty cash, and then your application assignment was preparing a petty cash report, going through and realizing you could get change back, you could drop change, you could get incorrect information, and your petty cash account needs to be reflected by using this new account called Cash Short and Over. Cash Short and Over will have an account number in the expense area, but it's not always going to have a debit normal balance. It'll either be debited or credited depending on if you're short or if you're over. If you're short, it would be debited. If you're over, you'll be credited. So now we're looking at 9.4. When we look at the journal for 9.4, it is a general journal. There are no special columns. So what type of transactions are going to go in there? Typically, transactions where your source document is an M. In the past, when we journalized transactions that were an M in our journal, it would always take 2 lines because it would never use a special column. So the same thing is going to hold true when we go through and journalize on here. But now here is one thing that you will get wrong on the test. Remember, I have been talking about in this chapter that we have an account called Accounts Payable. And then I have another account called Don's Quality Market. I don't have an account called Accounts Payable Don's Quality Market anymore. 2 separate ones. So if I have to affect the account Don's Quality Market, I have to write Accounts Payable / Don's Quality Market. I have to affect both accounts. One is the controlling account, and one is our subsidiary ledger saying how much we owe to that business. That is the hardest part about Section 9-4. So we have 2 transactions we're going to go through today. The first one says bought source supplies and account from Designer Supplies, $180, using source document M35. We're doing this as of October of the current year, so we'll get October in. Date is the 5th. So, Ben, what accounts are being affected? Yes. Which one are we putting first? Why? Our debit must always go first. So I'm going to do supplies store. Do not use supplies expense. Source document is M35, 180 in my general debit. Now, I have to do accounts payable / designer supply. Now, I need you to realize it says accounts payable / designer supplies. Do you see that slash? The slash is very important. That indicates 2 separate accounts. But here's the thing. Eventually, we are going to have to post this. Not in this chapter, but coming up soon. Yes, very soon. We'll be posting. I need to post it to accounts payable, and I have to post it to a designer supply. So what I have to do in my post reference column is I have to put a slash in there to indicate I need to post to 2 different accounts. So make sure that you put a slash in there, and then do 180 as a credit. If you forget to put this slash in there, it marks the whole line wrong. Don't do that. That'll be tough. Now, October 7th, return merchandise to Hendricks Product. Dylan, what's one account that's going to be affected? Accounts payable, Hendricks Product. Now, it says we return merchandise, and I need you to realize when you hear the account merchandise, you should have bells and whistles going off, going ding, 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 ding. The account should be purchases. That's what we learned in 9.1. Now, purchases is a cost account. It has a debit normal balance. We have to go through and record the fact that we bought something, we don't want it, and we're returning it. So, for example, the Thunder Zone bought some stadium seats. We don't want them anymore. We return them. So, I am not going to credit purchases. What I am going to do is I have a separate account that I keep track of all of my items that I am returning. And the reason that I do that is because I need to know if I have returned $75,000 worth of merchandise, that is a lot of wasted resources for my business. Somebody had to create the bill, somebody had to receive it, then somebody had to return it. So what is going on that we have so much merchandise that's being returned? So the account that we're going to be using is going to be called Purchases, Returns, and Allowances. And we are going to go through and you are going to credit purchases, returns, and allowances. So you'll debit your accounts payable and you'll credit your purchases, returns, and allowances. Brandon, I would appreciate it if you wait with me to hear what we're talking about. Our source document is DM65. DM stands for Debit Memorandum. Because think about it. What am I debiting? Accounts payable. You are going to learn about a source document coming up in the next chapter that is a credit memorandum. So we're going through and we are debiting our accounts payable. We have accounts payable / Hendrix products, so we have to put a check mark in my post reference as well, and we're putting in for $540. Most common mistake, forgetting to do accounts payable / the name of our product. Then, if you got that forget to put the / in your post reference. If you check that one, you should hopefully have 100, and you can try on your own on that one. I have the wrong supplies. Now I have it correct.